Part 2, alternative form of dividends. There are different types of dividend other than cash payment. Stock repurchases. Instead of paying cash dividend, a company buys back shares of its own stocks. It may buy its own shares in open market, or the company states the purchase price and the desired number of shares to be bought, called tender offer. From also repurchase shares from specific individual shareholders, targeted repurchase. Comparing with cash dividend, stock repurchase is effectively same as cash dividend because repurchase returns cash from the firm to the stockholders. So it is same as cash dividend in the absence of taxes and transaction cost. Stock repurchase become more popular, especially early 2000, as shown in this figure. They plunged in the 2008 and 9 recession as firms conserved cash, but rebounded in 2010. One of the advantages of stock repurchases over cash dividend is tax effect. For cash dividend, investors cannot control over timing or size of taxes since it sees taxes as ordinary income. And yet, repurchase allows investors to decide if they want the current cash flow. It is taxed only if investors choose to sell and reap a capital gain on the sale. The capital gain may also qualify as lower taxed one if shares are owned more than 1 year, long-term investment. The figure shows that after the tax cut, cash dividends substantially increase, meaning that taxes are main motivation for investors to prefer stocks with certain dividend policy, including choosing between cash dividend and stock repurchases. A firm may distribute additional shares of stock instead of cash, called stock dividends. It is not same as cash dividend or stock repurchase, since each stock will value less, holding total value the same. For example, 20% stock dividend increases the number of shares by 20%, but each share will be worth about 20% less. If stock dividends is less than 20 to 25%, it is a small stock dividends, and if it is more than 20 to 25%, it is large stock dividends. The number of shares may be increased by stock split, essentially the same as the stock dividend, except expressed as a ratio. For example, a 2-for-1 stock split is the same as a 100% stock dividend. Like stock dividend, stock price is reduced when stock split. The main motivation of stock split is to return price to a more desirable trading range. In some countries, we cannot trade less than a certain number of shares, so we need a cheaper share price to make too expensive stock more tradable. There's also reverse stock split, reducing number of shares outstanding. For example, a 1-for-5 stock split replaces every 5 shares of stock with 1 share. There are few reasons that the firm chooses to do reverse stock split. Transaction costs may be less for investors. Liquidity might be improved if the price moves to a more desirable trading range. Sometimes Too low price may not be considered respectable, so increases price by reverse stock split. Sometimes a firm wants to meet exchange minimum price per share requirements. Again, reverse stock split itself does not change the value like stock dividends and stock split. In summary, aggregate dividends and stock repurchase are massive and have increased steadily. Dividends heavily concentrated among a small number of large firms, and managers are very reluctant to cut dividends since it is treated as a bad signal for the firm's future prospects. So managers smooth dividends, raising them slowly as earnings grows. Stock prices react to unanticipated change in dividends. Because of this, changes in dividend signal management view concerning the firm's future prospects. Stock repurchases signal that management believes the current stock price is low because it is a chance to buy back undervalued stocks. Tender offers send a more positive signal than open market repurchase because the company is setting specific stock price. So stock prices often increase when repurchase are announced. As discussed, 93.8% managers hesitate to reduce dividends. 86.6% managers try to maintain a smooth dividend year to year. This survey confirms our previous discussion. This is the end of chapter 14. There will be final pop quiz true false question. Please solve and submit them. Thank you.